Hello, greetings, and welcome to Dividend Blasters. This is our 66th video. Today is February 25th, 2024. And the topic today is I'm a dividend investor, as you know. This is why I am still buying Nvidia. Now, before I go on, let me just say this. Nvidia does pay a dividend. You don't buy Nvidia, for God's sakes, for its dividend. You buy it for its growth. Okay, and I'm going to get into a little bit more of the numbers. I'll talk a little bit about that. But I truly believe that this company is something special. This is another Apple. This is another Microsoft. This is something very special. Is it too late to buy in? Well, you'd be better off if you bought in a year ago, but I don't think it's too late. It's just a little bit more pricey. All right, let's press on. First, a disclaimer, I am not your financial advisor. The purpose of this video is for information and education. It reflects my own personal opinions, my research, and my experience as an independent investor for more than 30 years. But please do your own research, consult a professional financial advisor prior to making any financial investment decisions. So, Nvidia, this company is a leader. They are a leader in the business world. They are a leader in the chip community. They briefly, just Friday, crossed over $2 trillion market cap. They finished a little bit under, around 1.97 million. They moved past Google and Amazon. They are number 4. They are behind Microsoft, Apple, and Saudi Aramco. And I think they're going to pass Saudi Aramco pretty soon. So this is a company that is on the move. They're growing very, very quickly. I'm going to give you the numbers, and I'm going to give you the good, the bad, and the ugly. Most of it's very good. Most of it's beautiful. Some of it's a little bit ugly, and it really relates to the price. But it kind of leads to the question I'm going to get to is it too late to buy in? All right, let's press on. So, what is NVIDIA and what do they do? Well, they're a chip maker. They design and they develop GPUs, graphical processing unit chips. These are high performance processors. They generate realistic and interactive graphics on PCs. They sell their products directly to PC manufacturers and directly to consumers through retailers. Okay, they sell their products to PC and laptop manufacturers, gaming console manufacturers, and really important, data centers. Who are their primary competitors? Well, it's primarily Intel, as much as they can compete with Nvidia, and AMD, Advanced Micro Devices. And that's really in the GPU market. And I'm going to talk about GPU market and also this other segment that they play in. It's called the data center market. They compete with Qualcomm, Texas Instruments, and a company called Infineon. All right, let's keep moving. So I did mention they have 2 operating segments. Their major business units at NVIDIA are the GPU, or graphics processor units, that are used in PCs, and compute and networking, which is really data center platforms and systems, all sorts of stuff. And they touch other industries like automotives, cryptocurrency mining processors and solutions. They also play in robotics and embedded platforms. Their chips have a wide array of applications. And where do they sell? They sell mostly in the United States, but also they work in Taiwan, China, Hong Kong, and in other countries internationally. What are some other products? Well, in graphics, the GeForce GPUs for gaming and PCs, Quadro NVIDIA RTX GPUs for enterprise workstation graphics, virtual GPUs or vGPU software for cloud-based visual and virtual computing, auto platforms and infotainment systems, Omniverse software for building and operating metaverse and 3D internet applications. That's all part of the graphics business segment. Their other segment, compute networking, is mostly data center computing platforms and end-to-end networking platforms. NVIDIA Drive automated driving platform and auto development agreements. Jetson Robotics and other embedded platforms. AI, enterprise and other software. DGX cloud software and services. Those are their key products. two business segments. Remember that: graphics and compute networking. Let's keep moving. So, how do they make their money? Well, they just finished their fiscal year. The FY 2023 fiscal year ended in January, just last month. About 22% of their revenue comes from graphics. So that was about $13.5 billion. About 78% comes from compute and data centers, around 47 billion. Total revenue around $60 billion. Pretty good. Their market cap, as I mentioned, did briefly cross above 2 trillion. They finished Friday around 1.97 billion. If you compared Nvidia's market cap to the GDP of all the major countries in the world, the economies in the world, they would rank number 12. They would rank right behind Mexico. They'd rank ahead of Russia. Russia's GDP is 1.92 trillion. South Korea's 1.78 trillion. They're ahead of Australia, 1.69 trillion, Spain, 1.68 trillion, and it goes on and on. And you can see that USA is number one, around 28 trillion, and then China is about 18.5 trillion, then Germany, and then Japan, and then so on and so forth. So this is a company that is growing. This market cap is amazing. So I mentioned the two business operating segments. The larger one for them is the data center market segment. Their share, how do they stack up in the competitive landscape? They own about, I want to say around 75% for Nvidia. And then you can see that they've been going up the last couple of years, and they've really gone up significantly in the last year and a half. They're the green line. Look at the turquoise line. The turquoise line is Intel. They've gone way, way down. They're around 10%. So in the data center market, they used to be around 80%. They're around 10%. And then look at AMD. AMD is around 10%, a little under 10%. They're a little bit below Intel. And they're kind of languishing, but Intel's really come down a lot, and really Nvidia has gone up. And my source is techspot.com, and I'm providing you the source reference. They did the research. It's really a great article. Came out just in December. And what is a really important info nugget is that this market, the data center market, grew at about a 30% compounded annual growth rate, the entire market. And of that market, Intel shrank at a 6% rate. AMD grew around 27%. And NVIDIA grew at about 103% per year. So they're really driving the growth in the data center market. And then let's look at the other business operating segment, the GPU markets. NVIDIA has a significant share. I want to say it's around 87%. This is a smaller of the two segments, but they dominate this. Their GPUs, which they design and develop, are really superb. And you can see that AMD has about 10%, Intel has about 3%. And experts are saying that this segment in the market is going to grow at about 33.5% on average a year through 2030. So, really important to know that as you plan how you invest. This is an industry that is growing and is growing significantly. And one thing that I am keenly aware of is this: that the demand for GPU chips is going to be so high, NVIDIA will probably not be able to meet all of the demand. So, what does that mean? That means that companies like AMD are going to be necessary to help pick up that excess demand. I got to tell you, I am invested in NVIDIA. I am also invested, not as much, but invested in AMD. I'm going to hedge my bets a little bit because I think that AMD is going to have a role to play here in this market sector of this industry. Let's go on. So, as I mentioned, NVIDIA is not really a company that you buy, even though they pay a dividend. You don't buy it for the dividend. The dividend yield is modest, 0.02%. So, what does that translate as far as a dollarized rate? It's 16 cents per share annually. What is the dividend CAGR? Well, the 5-year growth rate of the dividend is less than 1%. These are very modest figures. What is the dividend growth streak? It's 0 years. Let's see if they can mount a streak. And what is the projected annual dividend income given a $10,000 investment? It's $2. Like I said, you don't buy this for the dividend, you buy it for the growth. And I'll tell you, I have bought it. I have bought it. I've been buying little bits of it the last several months because I believe that this is a long term investment. It's going to be very profitable, and it has been profitable so far over the last year. It's just been phenomenal. All right, let's press on and go deeper into the numbers. The price as of Friday, the 23rd of February, $788.17. It is not cheap. Look where it was 10 years ago. 10 years ago, it was $4.60. You can see where it's been the last couple of years. And really, just in the last year, the price has gone parabolic. Okay. This company has been exceeding their earnings estimates, and the investors are responding. The market is responding. People are buying in. If you look at the last 10 years, they've gone up over 17,000% since 2014. I really wish I had gone in 2014. I didn't. How does that compare to the S&P 500? Well, it's about 100 times that. The S&P 500 has grown about 175% over the last 10 years. So, you know what? Hindsight is 2020. And if you could take all of your investments, put it all into Nvidia 10 years ago, you'd be a gajillionaire. But we don't do that. We are risk averse. We calibrate our investment decisions to be smart, and it's a smart thing to do, unless you have a crystal ball, which none of us do. All right, let's move on. All right, the PE ratio, the price earnings ratio, and I have a definition for our new investors, but the PE ratio right now is 66. It's about 3 times the PE ratio of the S&P 500, which is around 23 right now. And it has been higher, but you can see the PE ratio has come down because earnings have gone up. They have been meeting and exceeding their earnings estimates. So 66 is high, I believe, but it's not 200. It's not 250. This is a company, I think it's reasonable to make incremental investments in, to get your toe in there. I'm not saying go ahead and buy $788 a month. What I'm saying is maybe dollar cost average into Nvidia. I think that's smart. I think that is reasonable. Another metric that I like to look at is I like to look at the sector median. So, for instance, I will go into Seeking Alpha and I'll look at the sector median for its peers in the technology sector, and not just chip makers, all of them. Okay, and the sector median for PE ratio sector median is 2906. So it is significantly more. Okay, but people are buying in because they see the value. This is a company that is performing, they're delivering, and they're meeting their earnings estimates. They're exceeding them. All right, let's keep going. Earnings per share, or the EPS, and these are trending 12-month metrics that I'm sharing with you. The earnings has gone parabolic. So as of Friday, the earnings, the EPS is 11.93. You can see that about a year ago, 9 months ago, it was around, I want to say 2. So it's gone up 6 times in the last 9 months or a year. It has really gone parabolic. The forward EPS estimates for the next year are almost double. They are double, 24 and a half. So it'll be interesting to see where they go with earnings. Are they going to go ahead and 2x the current earnings? We will see. But it's interesting to see what the EPS was about 10 years ago. It was 0.21. So this is a company that has really, really come a long way. You can see I went ahead and I inserted an embedded graphic to show you the definition of EPS for our new investors. You can read it at your leisure. Let's go to the next one. Total revenue trending 12 months. Well, as I mentioned, it's 60 million, and I already gave you the breakout by segment. Um, Mostly about 3/4 data center, about 1/4 GPUs. It has more than doubled over the last 12 months. 10 years ago it was about 4.25 billion. Right now it's a little under $61 billion. Net income margin. Well, what is the net income margin? And I did give you a definition. I'm going to read this one because I think that this is important. It's the total sales. Okay, this is just net income. Total sales of a company minus expenses like the cost of goods sold, which is the big piece. Then some of your operating expenses, your G&A, depreciation, interest, and taxes. It's that over your sales. Okay, and right now it's 40, almost 49%. 10 years ago, it was a little under 12%. Um, Net income margin has more than 20 times the sector median for the technology sector. The sector median's net income margin is about 2.5%. Nvidia's is under 49%. It's absolutely staggering. And it's been high for years. They hit a little dip in 2023 where they went under a little under 20%. Okay. But look where they are now. Amazing. Next one. Now, this is one of my favorite metrics, levered free cash flow margin. Levered free cash flow is the money left over after a company's financial obligations are met. All of them. That's your cash. Okay, your free cash flow. Cash flow is the lifeblood of any business. We've heard that many times. So, what is the margin? The margin is the levered free cash flow over sales, okay, or over your revenue. And right now, their levered free cash flow margin is huge. It's almost 33%. And the sector median for the technology sector is a little under 9%. So it's more than 3 times the size of the sector median. 10 years ago, Nvidia's levered free cash flow margin was almost 10.5%. It's tripled. Unbelievable. This is a company that has a ton of cash. You might ask yourself, well, why aren't they paying greater dividends? Well, you know what? A lot of money is required in these high-tech businesses to go into R&D, to stay competitive, to keep that competitive advantage. This here is important. I added this. I wanted to give you a sense of what their debt levels are. Their debt level is very manageable. Their total debt to equity ratio is about 26%. Look at Broadcom's, and I'm an investor in Broadcom. I love Broadcom, 165%. AMD, their nearest competitor, and they're not that close. They're pretty far away, a distant second place, is decent, outstanding, actually, a little under 6%. Intel, they are struggling, about 45%. Qualcomm, good company, but 67% debt level. Nvidia is really in a great spot. I love their debt level. So, folks, that's it. I invest in Nvidia. I continue to dollar cost average into Nvidia. I don't buy it for the dividend, I buy it for the growth because I think it's a great long term investment. And, folks, that's all I have. I'm going to share with you just some resources on social media. I am also on Facebook as Dividend Blasters. I am on Instagram as Dividend Blasters. I am, as you know, here on YouTube. And I am also on X as Dividend Blasters. I'm going to share with you just some references to some other resources on social media. Dividend Snowball has great collaboration and discourse in their group, as does Dividends RS. A couple others that I engage with are Glorious Dividend Investors and Savings and Investing for Beginners. And folks, that's it. I thank you for joining us. I hope you found this to be informational and enjoyable. And give us a like, share the video with a friend, hit that notification bell, and please subscribe to our channel. Have a wonderful day, and God bless.